Hello, this is George Beyrouthi from FS Securities, a stockbroking firm on the Gold Coast in Queensland, Australia. First of all, I'm going to give you a bit of global market data here in Australia and overseas, and then I'm going to really focus on the CBA trade that we did 2 weeks ago and where we are today and where we're going with it. So first of all, you can see that most US indices and European indices were all down. Even in Japan, the Nikkei was down 0.6%. On our market yesterday, we were actually up 1.1%, 66 points, continuing from the day before and day before. So actually over the last few weeks, our market did extremely well. Gold at 1,313, hanging above the 1,300. And remember, 3 months ago, when gold in US per ounce was down around 1,200, I told you to buy gold shares, and you'll be doing very well today. And by the way, I reminded you that you should take some profit out of those shares, not all of it, but at least 20%, 25% of your profit. Crude oil, 52.7, down $1.30, down 2.5%. The Australian dollar hanging around the 71, with the announcement of the Reserve Bank that he might even consider reducing the interest rate in Australia rather than increasing it. Well, surprise, surprise. The Australian dollar will also give you 62.6 euro cents and 55.8 British pence and 104 New Zealand. Now, we also at FS Securities, we focus on the volume and the ratio between advances and declines. As you can see, during the Christmas period, the transactions were nearly 1 billion transactions per day, that is shares exchanging hands, and then very close to Australia Day and beyond, we started to see the market climbing up. However, the last 6 days, with an increase in the advances over the declines, as you can see at the top here in the blue versus what's below it, the volume has been dropping, and to us that means the market is very timid and hesitant to spend big dollars, thinking that maybe a recession. We don't know if the institutions are not trading as much, and we don't know if overseas trades. Remember that our market, at least 40 to 50% of the trades are conducted by overseas money. So it's not only the mums and dads that are sitting on the sidelines. All right, now that's the XGO, which is the ASX 200. You can see here for the last 3-4 weeks, the market has been climbing up. Remember, the market has actually dropped quite a bit during December or late November, early December, and now it's recovered most of it. One thing I want to highlight to you is that black line is the 200-day moving average. That line is followed very extensively by the fund managers and the big players. You see, it's been below it for quite some time, and now it's gone above it. Now, we think that that is a very good sign that the market, on our market, even though the volume is low, and even some people think could be recession, the technical charting is showing that there could be a small correction in the next few weeks. However, overall, the market may go up, and of course, we've got the earnings season coming up in the next few weeks, so we'll see what happens with the corporate earnings. However, that is a very good sign that the market over the 200-day moving average could be a first signal to an upward trend. Now, this is the mechanical system that we have here. We have a mechanical system that tells us what we should do for investors, conservative traders, aggressive traders, and very aggressive traders. And if you look at CBA, excuse me, it was bearish 5 weeks ago for the very aggressive, turned neutral, and of course the last few days we started to actually see that the market is starting to be very positive. Of course, we have 8 indicators. Some of them are lagging and some of them are leading. So if you look at what happened now, we think that CBA is moving upward. It's starting to develop an upward trend. I don't know what's going to happen today, but I would not be surprised at all. Today is Friday, of course, the 8th. We think that the market may likely to continue to go higher with the banks, and we'll see what happens with CBA. But as I said, I would not be surprised to see CBA going higher for not only today but also for next week. Okay, what happened yesterday? CBA was up 2%, $1.50 to 74.06. Now, remember when we traded the options, and I'll come to that in a minute, we wanted that yesterday the market to drop to actually stay between 74 and 70. Let's go through the CBA transaction in a minute and show you what happened. Okay, first of all, I want to show you what's happened with CBA, the monthly chart, the weekly chart, and the daily chart. For the investor, we look at the monthly and the weekly. For the trader, we look at the weekly and the daily in combinations. So you can see here there are some leading indicators and there are some lagging indicators. The leading indicators, we call them the stochastic and the parabolic stop and reverse. And on the monthly, you can see they're both bullish because parabolic stop and reverse, the dots, the red dots, happen to be below the candles. And by the way, we conduct a lot of education programs, so if you want to learn about how to read charts, all you have to do is call us. But anyway, the parabolic stop and reverse below the candle is positive, below the candle is very positive, below the candle is very positive. Stochastic, the blue line is above the red and heading upward. Here the stochastic on the weekly is positive and on the daily is positive. And some expert will tell you that if it's above that line, the horizontal line, it's overbought and it's time to sell. I disagree with that. The stochastic can remain above that line for weeks, days, months even. Sometimes we don't know. However, as long as it is above that line, we are bullish and we continue to stay bullish. So we've got a lot of indicators, leading and lagging indicators, that tell us from the mechanical system that I showed you that CBA is, at least for the short term, bullish. So that means you don't short it, you actually go long with it, or you buy it if you want to for a short period of time if you are trading CFDs or you're trading options. Okay, so now we talk to you about what happened when we entered the options trades, and that was on the 25th of January, nearly a couple of weeks ago. And what happened at the time when we entered the trade, CBA was 72.86. On that day it closed at 72.54, but we entered the trade around that level, 72.86, and we said there is a chance that the market will hover between 74 and 70. Now, a lot of people have told us that look, why are you doing this? Because there is the Royal Commission coming up in a couple of weeks' time, and you may find that that can cause a lot of drop in CBA. We took a view that the market had already dropped from 82.83 down to 72, and that has already been incorporating the announcement that is coming up. And we also believe that the market is not as efficient as all people are learning at the university degrees and master's degree, that all information is available to everybody at the same time. We think that people know things before you and me. And even though yesterday on the radio we heard that there was no leak, we think that some people knew something about it. Yesterday the market closed at 74.06. In hindsight, we should have kept our trade as is, and maybe only yesterday, as the market got closer and closer to 74, we should have done something with that particular strike. However, what happened is that we entered the trade with good intention, and we created a trade with a profit of 1,550 for our clients, potential earning, provided the market closed between 74 and 70. Now, of course, with options trading, you always take action when it is required. Now, what happened then, you see the 69 and the 70, as it gets closer to 70, we need to take some action. If it gets closer to 74, we take some action. So guess what happened? Well, 6 days after we entered the trade, we entered on the 25th, on the 31st at 1 p.m. we started to say, hang on, the market is too close to bear, it's very close to 70, and we entered the trade when we are here, when the market was very close to $70.30. even 30 cents above our strike, we decided to take some action. Now, in hindsight, we can always be in hindsight more clever. What we did, we closed the 69.70 and we closed the 74.75, and we entered a trade 74.72. We added on to 74, and we actually, instead of going 74 on the short side, we went 20 contract on the 72 and we went long on the 74. So in actual fact, we closed the 4 position and we entered the new positions. In hindsight, we were wrong. We should have done something about the 70.69 and waited to see where the market was going to go on the upside. So that was a mistake. But anyway, what we did then, we entered those trades, new trades, and we created an extra $1,200 profit. However, there was a cost to get out of the previous trades. So from the 1,550 trades premium before commission, if you add all the cost that we've incurred at that time, provided CBA remained between 72 and 68 at expiry on the 7th of February, yesterday, we would have actually continued to make profit for our client with approximately $1,000 net. However, we went to the doctor and the doctor said you need to do something about what you have, and we ended up closing those positions and we entered new positions with 74 the sell, which by the way was the original strike on the short side, and now we went to 76 instead of 75 now, and we've extended the position to buy an extra week. Now this is one of the many legs that I want to show you today, because at the end of this presentation I really want to invite you to a webinar that I'm going to have next week. Within the next couple of days you will be receiving an invitation from me about how to attend the webinar that I'm going to have sometime in the evening next week, and I hope that you come to that webinar, and I'm going to take you step by step about where we are. Most likely will happen after the market close next Thursday, because that will be the end of all the CBA trading. Whether we make money or otherwise, that will be the end of the CBA trading. So please join us, and don't forget we have a disclaimer. I don't know your financial circumstances, so obviously you need to actually talk to us before you enter any particular trade, or talk to your professional advisor. So that's all from us here, and if you have any questions, by the way, all you have to do is ask questions, and these are my details, george@fssecurities.com.au, and you've got the phone number there. So have happy trading and enjoy, and I hope you enjoyed that presentation.